All right, let's dive into something, well, a little spooky. It's a high-stakes financial game with a chilling name, the vampire strategy. We're gonna uncover how your retirement savings, yeah, your pension, could be secretly fueling a massive, hidden, and super risky ghost economy. Just think about this for a second. Picture a company you've known your whole life, a household name, and then one day you realize it's just a shell. It's been stripped for parts, and the pension fund that promised made to thousands of workers over decades, it's just gone. This isn't some horror movie plot. It's what can happen with this very real, very calculated strategy. It sounds nuts, right? I mean, completely outrageous. So the big question is, how on earth do they get away with it? How can a promise that huge, a company's financial soul, just be dismantled and disappear? Well, the answer starts with what looks like a simple, friendly deal. And that brings us to what we're calling the pension handshake. You see, this whole thing hinges on something that big, old-school companies really hate, their own pension plans. See, for you or me, a pension is security. It's a promise. But if you're an accountant at a huge corporation, that pension plan is a nightmare liability. It's this gigantic, long-term debt that they are legally on the hook for. And trust me, they want it off their books more than anything. So in walk the private equity firms. You know, the big players like Apollo or Blackstone. They come to the corporation and say, hey, we'll take that pension problem off your hands. The corporation transfers billions of dollars in pension assets over to them, and boom, just like that, this massive debt vanishes from their balance sheet. For the corporation, it feels like a total win. But here, this is where it gets spicy. That handshake is just Act 1. What the private equity firm does next with all that money, that's the core of the entire strategy. This is how a simple deal becomes a massive, high-risk gamble. Okay, just look at the difference here. The old, boring way, an insurer would take that pension money and put it into something incredibly safe like US Treasury bonds. You get a small but pretty much guaranteed return. But these PE firms, they're not playing that game. They take that same retirement money and pour it into really complex, high-risk stuff. Things like private credit and these bundles of loans called CLOs. Why? Because they're chasing way higher returns. So this is the secret sauce. This is how they actually make their money. It's all about something called the spread. They're aiming to earn, let's say, a juicy 7 or 8% on those risky investments. But the amount they legally have to pay out to the actual pensioners, that's locked in at a much lower rate, maybe around 3%. That gap in the middle, that's pure profit for the firm. And we are not talking about a little bit of cash here. When you apply that spread across hundreds of billions of dollars in pension assets, the profits become absolutely astronomical. It's enough money, as one source put it, to literally buy a small country. This is the engine that's driving this entire ghost economy. Okay, so this is a hugely profitable strategy, but it sounds incredibly risky, which probably has you thinking, wait a minute, how is any of this legal? Well, that brings us to the next very clever piece of this puzzle, shopping for laws. The key here is a fancy-sounding concept called regulatory arbitrage. But forget the jargon. All it really means is this. If you don't like the rules where you are, you just pack up and move your business to a place where the rules are, well, more to your liking. You're literally shopping around the globe for the friendliest, most corporate-friendly laws you can find. And here's exactly how that game is played. In the United States, you've got super strict rules about what you can do with, grandma's pension money. But if you move your operations offshore to a place like Bermuda, whoa, everything changes. The investing rules suddenly become nuanced and flexible. The accounting standards get a lot friendlier. And forget about public courts. Disputes are handled in private corporate arbitration. So you've got the insane profit motive, right? And you've got the legal loopholes that make it all possible. What happens when you put those two things together? What does this system actually create? Well, this is where we find the ghost lurking in your pension. Critics have some pretty alarming names for this new reality. They call it shadow banking because you have these gigantic financial machines operating completely outside the view of normal regulators. Some go even further, calling it a slide toward techno-feudalism, where a handful of PE firms control unthinkable amounts of capital. The rest of us are just along for the ride. But the real bottom line is this. It creates a massive hidden risk. If the economy tanks and those risky bets go bad, that money promised to retirees could just evaporate. And this is probably the most powerful way to think about it. The risk from all these pensions hasn't actually gone away. It's just been moved. It's been transferred from corporate books and hidden away inside this offshore shadow system. Our whole economy might now be resting on this load-bearing wall of hidden risk. And if that wall ever comes crashing down, you can guess who's going to get stuck with the bill. So after all that, what does this actually mean for you? Well, I'll leave you with a final thought, a little homework. If you, or maybe your parents, have a pension, I want you to do something. The next time a statement or a check comes in the mail, take a really close look at it. Whose name is on that check? Is it the company they worked for, or is it someone else? The answer might just tell you everything you need to know. Thanks for tuning in.